Good afternoon and welcome to the Boring Millionaire podcast. My name is James Lamantia. My mission is to not only make you money in the stock market, but to show you how to make this money so you can confidently do it all on your own. So today we're going to be discussing in this video what we've seen in the stock market over the past week, what kind of environment this market is in, and where I believe the market will continue to move. So starting from Monday, the 21st, we've basically been in rally mode the entire time. So Monday we did start at 62.90 on the S&P 500. And just a reminder, the S&P 500 is the benchmark measurement of how the stock market is performing. It's really a grouping of the 500 best performing stocks that are on the public market, but it's used as a measurement to basically say, this is how well the market is performing, and as a full measurement where the market is going. So with all things said, Monday, we did see a fresh record high, Monday the 21st. Then Tuesday, it did simmer down a bit. But then Wednesday, Thursday, Friday, yesterday's Monday, as well as today, Tuesday the 29th, we saw the stock market break into a new all-time high every single one of those days. But the interesting part about that is that we aren't having any crazy runs upward. We're not having more than 1% up on any given single day. What we're seeing is small gains, let's say 0.2, 0.3, 0.4% upwards, just compounded one on top of the other. So the market is moving very calmly, it's moving very slowly, and although that doesn't sound exciting, sometimes that is how the stock market performs. So the environment we're in right now is what I like to call a wait and see environment. Everybody's just waiting and seeing what's going on next. So the reason it becomes a wait and see market is because we had a major discount about 3 to 4 months ago. We've rallied out of that discount. We've broken into fresh all-time highs on the market. And now we need new news to incentivize people to buy stocks, as well as that news could dictate what direction we really go in. So the two major pieces of news that are surrounding the market right now is the earnings season that we're currently in. We're about 30% of the way through earnings season. I will, in a separate video, get into the details of what earnings to look at and what I expect of them. But so long as earnings continue to be positive and earnings forecasts for the future continue to be positive, that should incentivize people to continue investing in the stock market. And then in turn, that would raise the prices of stocks and send this market further into record territory. The other piece of news surrounding the stock market this week is the Federal Reserve meeting that we're going to see on Wednesday, July 30th. So back in 2024, the Federal Reserve did say that they were looking to cut twice through the year of 2025. Now, we haven't seen a single cut yet this year, so I'm beginning to have an anticipation that we're going to see one major cut as opposed to two little cuts. Now, if they make this major cut, or really any cut, on this meeting on Wednesday, that will certainly add fuel to the stock market. It'll incentivize people to not only invest in the stock market, but it eases tensions. It's a piece of news people are anticipating. We don't know if they're going to do it, when they're going to do it, but if they were to do it, that would certainly be a positive signal for the stock market as a whole. So with all things said, I do think if the market continues to move higher, we're going to see a level of around 64.50 to 65.25 on the S&P 500. However, let's plan for both avenues. Let's say earnings start to come out poorly. Certain major stocks are weighing heavy on the market after a poor earnings report. If the market were to fall, not only would I see it as an opportunity, and an opportunity that should be taken advantage of and would be used to put money into the stock market as well as particular stocks, I do think the lowest we would go is 6,200 on the S&P 500. Now, the reason I would think it's 6,200 is because on Wednesday, July 16th, we did see the worst performing day on the S&P 500 since breaking into new record territory. Now, with that said, we did fall to a 6,200 level, and I do believe that that established a floor for us moving forward. Now, what I mean by a floor is that is the lowest I expect the market to go if we were to see a downturn in this market rally. So I don't expect a market downturn, but if one were to come up, I do think that is the lowest that we would see the S&P 500. Another reason I think that's the lowest we would go is because the old highs become the new lows, and the prior all-time high on the S&P 500 was 6150. So with all things said, I do think that's the lowest the market would go if we were to get some bad news coming out of some of these earnings reports, but I do think that the market will continue higher. I would also like to add that the volatility index was under 15 this morning as well as yesterday. So when the VIX is under 15, that's a huge positive signal for the market, telling us that the fear factor is low, the animosity is low, and that people really are more eager and incentivized to be purchasing stocks and investing in the stock market. So with all these things said, I'm always here to be your guide to navigating the stock market. My mission is to not only make you money in the stock market, but to make you understand the stock market so we could all make this money confidently on our own. So follow me on Facebook, follow me on Threads, follow me on Instagram, and all episodes are available on YouTube, Spotify, and Apple Podcasts. Thank you for tuning in, and I'll be excited to see you next week.